Welcome back, hope you are all doing great. I am seriously thrilled for today's video because Bitcoin is still holding above its 50-week moving average, and that means the full reset scenario remains our main case for now. Now, could the cycle already be finished? Technically, yes, that is why I say unlikely, not impossible. But as long as the broader market structure stays intact, we follow the trend. And sticking with that trend is exactly what kept us calm when everyone else was panic selling. Remember, April 2025 or August 2024 or even September 2023, each time the crowd lost it and we stayed focused. Fast forward to now November 2025 and once again Bitcoin is testing that same 50-week moving average. And guess what market sentiment is absolutely terrified again? Exactly what we expect near local bottoms during corrective phases. Every single bottom this cycle came with extreme fear. You also tend to see heavy long liquidations just like recently with around $1.3 billion wiped out. And of course, short-term holders are giving up again the same way they did back in April. They bought a few weeks ago, saw prices dip, and are now panic selling. Analysts are as usual predicting Bitcoin's imminent collapse. And every single time we revisit this key support zone, there is always some scary headline dragging emotions down. In September 2023, it was the SEC crackdown on Coinbase and Binance. In August 2024, it was the implosion of the Japanese yen carry trade. In April 2025, we had the tariff chaos shaking markets. And now in November 2025, everyone is losing their minds over the 4-year cycle, saying this one has lasted exactly as long as the previous two from bottom to top. On top of that, the Fed has turned more hawkish than expected, and the US government shutdown is dragging on tightening liquidity and slowing capital inflows into both markets and the economy. So yes, bearish Bitcoin calls on YouTube and X are louder than ever right now. It is easy to get swept up in that noise, just like the last 3 times we hit this same critical support. But honestly, it is much simpler to let the market decide who is in charge. If we hold this level again and start climbing, the bulls are still running the show. But if we lose this level and close below it, that means the bears have taken control and we will adapt accordingly. So what am I doing with my portfolio and how am I positioning myself during all this uncertainty as we test major support? I have deployed some cash across my positions. I honestly did not want to because sentiment is very low, but following my system has not failed me once this entire cycle. Every single time it felt difficult to sell and take profit, it turned out to be the right move. And every single time it felt uncomfortable to buy because sentiment was negative, it ended up being the perfect time to do so. But let us go ahead and talk about the main reason why Bitcoin's price is moving down. It is because long-term holders are taking profits and the buy pressure can no longer keep up. This has been a consistent pattern throughout the entire cycle and the reason we have seen a slow and steady uptrend instead of a sharp blow off top. Whenever Bitcoin rallies long-term, holders begin taking profits. When it consolidates, they start accumulating. Then, when it rallies again, they take bigger profits. When it consolidates again, they accumulate more, take profit, then accumulate. And now we are once again in the take profit phase. That is why we are not seeing the dramatic blow-off top everyone wants to see. Instead, we continue with this more stable, slow and steady uptrend as long-term holders sell during rallies and buy the dip during corrections. The reason buy pressure cannot keep up with this profit taking is because corporate treasuries shown in orange and ETFs shown in green, or both combined shown in blue, are no longer buying large amounts of Bitcoin. They have mostly remained flat. This is clear in the ETF inflows and also in the smaller purchases these strategies have been making recently, because they can no longer use the high premium to issue more shares and buy Bitcoin. As a result, the price continues to consolidate until long-term holders and ETFs find levels attractive enough to step back in. Speaking of attractive levels, Bitcoin is now back in its fair value region for the first time in quite a while. It is no surprise that long-term holders were taking profits in the expensive zone based on how far we were from the 200-week moving average, which Bitcoin historically loves to revisit. The closer we move to that 200-week moving average, the better the long-term buying opportunity becomes for anyone with patience and a long time horizon. And interestingly, the last time Bitcoin was testing its 50-week moving average, it was also sitting right in the fair value region. Back then, many people were convinced that Bitcoin was going to fall much lower and that they would get another chance to buy in the cheap zone around 60K. But we were not convinced that would happen. Instead, we expected Bitcoin to hold the 50-week moving average and climb back into the very expensive region, which it eventually did because at that time the very expensive region meant Bitcoin trading above 115000. These value zones keep rising gradually alongside the 200-week moving average, which continues to move higher week after week. So how far could Bitcoin fall during this correction? We have already tested the possible region and bounced off it right at the 50-week moving average. I still believe the 80 to 90k range is unlikely, but not impossible. Anything can happen in this market. A 21% correction for Bitcoin is completely normal and should not surprise anyone since we have repeatedly seen big rallies followed by 20 to 30% pullbacks throughout this entire cycle. There have been around 6 corrections over 20%, while 30% drops have been much less frequent. As for MicroStrategy, it is currently testing a major support level at the 100-week moving average, which also lines up with the low it set back in April 2025. So I do expect some sort of bounce from here. They recently announced that they will be launching a Euro stock offering to raise funds for additional Bitcoin purchases, so we will have to see how that plays out. I have also received many questions about whether MicroStrategy could be forced to sell its Bitcoin during a bear market. But if you look closely at their debt agreements, most of them are due in late 2027, and the majority actually in 2028. That means even if we enter a bear market in 2026, it would not force MicroStrategy to liquidate any Bitcoin. However, if Bitcoin's price declines sharply, it would definitely have a negative impact on MicroStrategy's stock performance. So we will keep watching the weekly close on Sunday. As of now, this looks like an ugly range breakdown with a major false breakout above 109k. I still give more importance to the 50-week moving average than this pattern, but it is not a great signal either. At the moment, we are down about 6% in November, which might sound surprising given how bad the price action and sentiment have been, but there is still plenty of time for the month to change direction. As for the GLI, it continues to move lower as the market prices in fewer and fewer rate cuts after Powell's recent hawkish tone. Right now, only 3 rate cuts are being priced in for the next 12 months. This has strengthened the US dollar, which is climbing back toward its key moving averages where I expect it to eventually roll back down. I do not believe the economy and financial markets can sustain these elevated interest rates for as long as the Fed is projecting, especially after nearly a decade of near zero rates. We are already seeing early signs of stress in the system, which is why the Fed has hinted at ending quantitative tightening starting December 1st, which is just a month away. I believe quantitative easing will need to restart much sooner than the market expects. We also know that the extended US government shutdown is making investors nervous and squeezing liquidity, but this situation will eventually come to an end as well. When that happens, the global liquidity index should continue its broader breakout, leading Bitcoin higher after finding a local bottom, and pushing gold higher too once it finishes consolidating. I think these assets will keep taking turns leading rallies, even though at the moment Bitcoin looks weak because of the high levels of fear in the market. After this short-term pullback in both Bitcoin and the S&P 500, I expect them to move higher again. The S&P 500 uptrend remains solid. We need to remember that short-term price swings can be volatile, but the long-term direction is shaped by the Federal Reserve, which is still heading into a rate-cutting cycle and will eventually need to return to quantitative easing, even with real GDP sitting at 2.1% and expected to rise in Q3. The labor market is gradually weakening and will likely force the Fed to act even though inflation remains above the 2% target. Now, moving on to Ethereum. It is not surprising that we saw a big wave of capitulation right after the clear break below the key pivot level at 4,000. Many investors likely started panic selling once that level was lost. At the moment, Ethereum has bounced strongly from major support at the 50 and 100 moving averages. ETF inflows remain quiet just like with Bitcoin, and I do not expect Ethereum to show any major strength while Bitcoin is still under selling pressure. Ethereum and Bitcoin both took a hit recently, but Bitcoin is now bouncing near its 50-week moving average. It is not surprising that altcoins are still struggling with the altcoin season index sitting at 37 because the Russell 2000 is still moving sideways near its previous all-time high and has not yet given a clear breakout. Until we see that happen along with a breakout into price discovery for Ethereum, I expect altcoins to remain under pressure. And speaking of altcoins continuing to struggle, it is also not surprising that Solana saw a sharp capitulation after getting rejected at the top of its range. The main reason Solana is being dragged down is the weakness in Ethereum and Bitcoin. Even though we are seeing solid inflows into the new Solana ETFs and I expect that trend to continue, Solana will likely keep reacting more aggressively to the movements in Bitcoin and Ethereum until both of them stabilize. This is why we are also seeing a decline in the Solana Bitcoin pair as it moves back toward the December 2023 lows where it has previously found macro bottoms. The rolling one-year performance for these assets has not looked great after the recent sell-off, but I expect that to improve as long as Bitcoin holds above the 50-week moving average, which remains the key macro support level. Looking at the longer term, the federal government continues to run massive deficits, and that trend seems to be worsening each year. Exponential debt growth naturally leads to exponential money supply growth, growth, and as the currency continues to be debased, it creates a long-term bullish tailwind for risk assets such as the S&P 500 and for fixed supply assets like Bitcoin. As always, let me know what you think. Thank you for all the support on the recent videos. Thank you for watching, and I will see you in the next one.